Bitcoin versus gold. What's the best investment in an economic crisis? When the world is believed to be falling to pieces, then one particular asset in the past has been a fantastic safe haven to hold your wealth. Whatever your views are on the yellow metal, you cannot deny gold's effectiveness at safeguarding your wealth.
In times of panic, some investment classes perform better than others. Being invested across a range of different asset classes can help to offset declines in the others. When stocks fall, historically, gold has risen.
So should we be looking at gold? After all, gold has been an incredible place to store wealth for thousands of years and has survived the collapse of civilisations.
But now there's a new kid on the block: Bitcoin and other similar cryptocurrencies. Bitcoin shares many of the same properties as gold, but with unique features which potentially gives it an edge. Will Bitcoin eventually topple gold as the go-to defensive asset? Only time will tell.
In this video, we're going to look at the features of gold that make it such a good hedge against recessions and how it compares to Bitcoin. By the end of this video, you'll know exactly where to store your wealth to guard against an economic crisis. Let's check it out. Welcome to Unshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe.
The easiest way to begin buying Bitcoin is by opening a wallet on a platform like Coinbase, one of the world's largest crypto exchanges. Buy $100 or more of any cryptocurrency and you'll be given $10 for free as a sign-up bonus when you use the link on Unshackled.com. This is just one of many such offers. We put the link to the offers page in the description below. Now let's get into the video. Gold and Bitcoin, are they money? Money must have all of the following defining characteristics. It must have value, be durable, portable, uniform, divisible, limited supply, and be usable as a means of exchange. Gold is the original money, whereas Bitcoin is the money for the internet age.
Gold as a wealth defender. Gold is one of the oldest forms of money, and historically its value has steadily held or even increased for thousands of years. Gold's price is derived simply by supply and demand, and as we all know, there is a limited supply and what seems like an ever-increasing demand.
Only recently has money moved to a fiat currency where it is not backed by a physical commodity. In the not too distant past, paper money could be converted into a fixed amount of gold.
The gold standard is long gone and we are left with currencies which have no intrinsic value. Because of this, investors rush to gold in times of panic. Just look at the surge in the gold price since investors lost confidence in everything else.
Paper currency has eventually led to the collapse of almost every economy that has tried to institute a fiat currency to trade for goods and services. This fear is a key reason why people continue to invest in gold the world over.
Why Bitcoin is different. Bitcoin has been referred to as digital gold, and like gold, there is a limited amount of Bitcoin that can ever be in circulation. Bitcoin is a blockchain-based cryptocurrency, and unlike fiat currency, Bitcoin is created, distributed, traded and stored with the use of a decentralized ledger system known as a blockchain. It's done awesome so far during the lockdown. Look at that recovery after an initial sell-off. The Bitcoin price is now back to where it was before the coronavirus crisis began and significantly up since the beginning of the year, outperforming the stock market, which is still down.
The idea behind Bitcoin was to produce a means of exchange, independent of any central authority, that could be transferred electronically in a secure, verifiable and immutable way. We think that it is these characteristics that give Bitcoin the potential of being a future safe haven asset. An unknown software developer going by the name of Satoshi Nakamoto proposed Bitcoin in 2008, and in 2009 the new digital currency was born.
In dead simple terms, it is simply a piece of code that can be used as a currency. We are of course oversimplifying this, but it's unlikely that you need to understand the technical details unless you plan to invest some serious wealth. You probably use fiat money such as the British pound, US dollar or euro every day without fully understanding the monetary system.
Having said this, we like to go by Warren Buffett's philosophy of only investing in things we understand, and we suggest you also follow his advice, so do your homework before throwing your hard-earned money at this speculative investment. Cryptocurrency has little history and is very volatile. A lot of novice investors have previously been drawn in and subsequently lost a lot of money.
Bitcoin versus gold, a comparison. Number 1, Rarity. Both gold and Bitcoin are in limited supply. Bitcoin was designed this way. The fact that supply can't just suddenly increase for either means the effects of inflation are limited, and that they should both hold their values.
One downside of gold is that nobody knows just how much is still to be found. A meteorite could hit the Earth tomorrow full of gold. There won't be a meteorite full of Bitcoin hitting the planet anytime soon. Whereas for Bitcoin, the total amount that can be mined is known. There will only ever be 21 million Bitcoins ever produced. Currently, around 18.5 million Bitcoins have been mined, which leaves just under 3 million more to be introduced into circulation.
Number 2. Hands off my assets. Gold has an established system for weighing, trading and tracking. There are easy techniques to test its authenticity and purity, and it's hard to steal when safeguarded properly. Small sums of gold found in jewellery may be stolen, but breaking into bank vaults just doesn't happen.
In terms of protection from criminals, we would both feel very confident in holding all our wealth in gold as long as it was properly stored. However, Bitcoin theft seems to be a regular occurrence. In 2014, Mt. Gox, a Bitcoin exchange, had $450 million stolen.
Legally, there are few consequences when Bitcoin is stolen, and alarmingly, it seems relatively easy to do. Most people store their Bitcoin in online wallets, but this puts it at risk of hackers. In fact, a friend of ours was a victim of Bitcoin theft, but thankfully it was only small amounts.
Depending on how you look at it, the off-the-grid nature of physical gold could be one of the metal's most attractive features. Gold cannot be tracked electronically, and at a time when governments are increasingly snooping into our lives, this might be increasingly important. Although there are rules around reporting your gold purchases to HMRC.
Bitcoin, on the other hand, or the underlying blockchain technology, is a completely transparent trading system. The blockchain acts as a public ledger, or record, for every financial transaction on the Bitcoin network. However, when it comes to Bitcoin, everyone is pseudonymous, meaning disguised identity. Your Bitcoin wallet address is what links the transaction and is public, but there is no name or physical location attached to the address itself.
Number 3, underlying value. We've previously said dismissively that gold has no real use, but this isn't quite true. Half of known gold is used in jewellery and some is used in electronics. This gives gold a use which underpins its value. We are however sceptical that these uses warrant such an expensive spot price, but nevertheless there is a baseline value.
Most people think that Bitcoin has no underlying value, and we must admit that we were once among the naysayers. But Bitcoin has tremendous value. Billions of people around the world lack access to banking infrastructure and traditional means of finance like credit. It is not yet fully developed, but when it comes to banking, Bitcoin opens up a world of opportunity by giving everyone access to transact globally for close to no fee.
Our own experience of Bitcoin contradicts this though, as when we've played around with it, we found the transaction costs too prohibitive to be used as a currency. We probably need to explore this further, but it'd be great to hear your thoughts on this matter in the comments section.
Number 4. Liquidity. Liquidity refers to the ease in which an asset or security can be converted into ready cash without affecting its market price. Gold wins this round as it is so easy to convert any amount of gold into cash. The Bitcoin market, however, is limited, as the exchanges that allow fiat currency withdrawals often impose daily limits, and there are still relatively few businesses or individuals that accept payment in Bitcoin. It is very early days in all fairness.
Our research suggests that daily withdrawal limits does vary greatly between exchanges, but it is often in the tens of thousands of dollars, so liquidity is probably not going to be an issue for most users.
Number 5. Volatility. This is the major problem for Bitcoin, which lessens the argument that it can be a safe haven asset. Just a few years ago, the Bitcoin price was about $19,000 per coin. Then several months later, it was as low as $4,000. Now, at time of filming, it is around $10,000. This volatility does not make Bitcoin a safe place to store wealth.
Gold, on the other hand, is nowhere near as volatile, perhaps making it a safer asset. Gold has a proven history of increasing in value in times of panic and holding fairly steady at other times. Bitcoin's history is yet to be written. Whichever camp you're in, it's becoming increasingly obvious that there's a place in this world for both. We can't predict their future values, but neither are going away anytime soon. Bitcoin doesn't have to be a replacement for gold, but can complement it in your investment portfolio and as a currency. It's now the time that everyone starts thinking about adding Bitcoin to their own portfolio.
Question of the day. Do you invest in gold or Bitcoin? We want to know what percentage of your assets are held in each. Let us know in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.